3 stocks that I'm buying in October 2018. Guys, this is the most popular video series on this channel. You guys absolutely love these videos. And today I'm going to be presenting you 3 stocks that I think are going to be great buys in October 2018. So all 3 stocks are very popular stocks. You've heard of all 3 of them before, I'm sure. And I'm going to go over my reasoning as to why I think they're great buys for this month. So as usual, we're going to have our like challenge. If we get 200 likes on this video in 48 hours, I will release a second 3 stocks I'm buying in October 2018 video. So last time you guys got 100 likes in about 6 hours. So let's see if you can get 200 likes in 48 hours this time. There's tons of opportunities out there and tons of stocks for me to cover. But if you guys want to see it, you need to show your support and hit that like button and hit that subscribe button as well if you're new to the channel. Anyways, getting right into it. Our first stock this month is a stock that's actually kind of fallen off a lot of people's watch lists and hasn't really been talked about a lot recently. It is a FANG stock and it has had an amazing run in the first half of 2018, but has since kind of started tapering and moving sideways / downwards. And no, we're not talking about Facebook here. So if you haven't guessed, this FANG stock that we're talking about is Netflix. So it's actually kind of funny to see how sentiment changes so quickly in the market. Like I said, the first half of 2018, this stock was a high flyer, going up as much as 5% some days. And now the second half of 2018, it's kind of been a laggard and it's kind of been moving slowly, moving down a few percent, moving sideways. It's just not been that huge performer that people were expecting it to be in the second half of this year. Ever since its earnings back in July, the stock has honestly just been struggling. And this was of course due to the number of subscribers that they brought in the quarter before that, and it didn't meet analyst expectations, so as a result the stock price really suffered in the following months. When it comes to a company like Netflix, subscription numbers is pretty much the most important metric, because without subscribers you're not going to have any revenue or any profit. So the more subscribers they bring in, the more the stock is going to move higher, and the less subscribers they bring in, the more the stock is going to move lower. That being said though, the platform Netflix is still chugging right along, creating amazing content. A lot of great Netflix original movies and TV shows are still being released. So in terms of the business, everything is still pretty much intact. Now if we look at what analysts have to say here about Netflix, we can see that most of them are pretty bullish on this company with a combined price target of around $392. Now, in fact, if we look at this, we can see in the last 3 months that only 2 out of these 38 analysts have set a sell rating on this stock, and 10 of them have a hold rating on this stock. The rest of them have a buy, so the majority of them are still bullish. The most recent upgrades, in fact, from analysts are actually much higher than the combined price target. Most of these new analyst price targets coming in at well over $400 per share. So as we saw, analyst sentiment hasn't really changed on the stock, even though the stock did move down and kind of sideways for the last few months. If you want to see a more detailed view on what analysts think about this stock or any other stock in your portfolio that you're watching, make sure to check out TipRanks. I'll leave a link in the description below. It's a free service. You can sign up for free and you can take a look at what analysts have to say about any stock you have out there. I personally use it not only for these videos but also for my own personal analysis when I look into buying stocks for the long term. So it's a great resource to have to add to your stock analysis toolbox. Now let's get into the fun stuff and look at the technicals here for Netflix, which is what caught my attention initially. So we can see here that it's been moving pretty much sideways recently. I mean, there's not too much excitement going on with this stock. It's trying to break out, but it has been pushed down lower due to the overall market sentiment and the overall market reaction. And unless you've been living under a rock, you've noticed that tech in general has been suffering recently. So that being said though, what I like about Netflix here is that we broke past the downtrend resistance, and now our next hurdle is to break past this resistance at $370 per share. Now, in my opinion, the stock is still acting very strong, and all we need is some big volume to come in or some catalyst to push some big volume, and that'll blow us past $370 per share and start us in a rally. Also, what you need to keep in mind is that Netflix will be reporting their earnings in about 3 weeks. So based upon past earnings, we usually get a run-up closer to around 2 weeks before earnings in anticipation for the earnings report. So that's another thing to keep in mind here. Now this doesn't mean that it's going to happen again this season, but like I said, this is a good thing to keep an eye out, because more likely than not, since the stock has been suppressed a lot recently, we may see an earnings run up as we approach the earnings for Netflix. So Netflix is actually a stock that I've actually been personally trading and making some pretty good gains on as well. I've been trading options actually in Netflix, and if you're a part of my VIP membership group, you would have seen this trade, for example, that I closed recently and I made a pretty decent profit on, and it was pretty much a pure technical play. It was an easy $200 profit. I posted exactly when I entered the trade, I posted my reasoning for entering the trade, and I posted exactly when I exited the trade. So you would have seen my whole thought process behind this trade. Of course, I would never recommend you to follow me because I'm not a financial advisor, but you can use this as another tool to kind of get insight as to how I think and maybe use that in your strategy as well, or use aspects of it in your strategy as well. So if you do want to see more trades that I make just like this in Netflix in both shares and options, make sure to check out the VIP group. I'll leave a link in the description and in the comment section as well. Okay, that's enough self-promotion. Let's get into our second pick. So the second company that we're going to be talking about is one that's actually been showing a little bit signs of life recently after falling off a cliff back in May of this year. It took 4 months, but now it seems like we have bottomed out in this stock and we may be ready for a move higher here. They are a popular Japanese company that has helped bring Pokemon to the masses. If you haven't guessed what company that is by now, it's Nintendo. So Nintendo is actually a gaming company, or a company in general, that really flies under the radar for the most part, because these other high-flying game companies like Activision Blizzard or Take-Two Interactive usually steal the spotlight from Nintendo. But what you need to remember with Nintendo is that they have a strong brand and a strong lineup of games, to be honest. They have titles like Pokemon, Zelda, and Mario under their belt. But what I really love about Nintendo versus some of these other gaming companies is that they don't only make games, but they also make the console for the games. And speaking of their most recent console, the Switch, it's actually been the best-selling console in Japan for the last 6 months. So as of right now, they've sold just over 5 million Switch units in Japan. And as comparison, the Sony PlayStation 4 has sold around 7 million units so far in Japan. But it has been out 3 years longer than the Switch has. So clearly you can see the Switch's growth is much more exponential than Sony's PlayStation 4. So the reason that I actually wanted to revisit Nintendo, and the reason that it actually caught my attention to begin with back in May, was because when it did fall off a cliff, it was because of news that their gaming lineup for this year looked fairly poor. But the funny thing is, I thought their lineup was pretty strong, and Nintendo even came out and said that they did not release titles of every single game that they will be releasing this year. So in my opinion, I thought that was a pretty big overreaction from the market. Maybe the stock did run up quite a bit, so people were profit taking. But I think that the stock is actually poised to move much higher in the next few months. And the saying, buy when others are fearful, might actually hold true for this stock right here. Now let's take a quick look here at what analysts have to say about Nintendo. And we can see that unfortunately there isn't too much coverage on Nintendo because it is an OTC stock here in the United States. And for the one analyst that does have a price target on Nintendo, it's at around $72. So that's a huge upside from where the stock is currently. But now if we look at the technicals for Nintendo, which is again the reason that it caught my attention this month, we can see here that we've come back up to a previous support level that we broke. And now this support level is acting as a resistance level, and the stock is actually testing this level. So just like Netflix, if we can get volume to come in here to pick up, to blow us past this level, or if we get some positive news on sales or the company or a game they're releasing or anything to do with the industry even, we'll see Nintendo, in my opinion, break past this level and set itself up for a great rally. Now what I also want to note here is that Nintendo is above all of its moving averages currently, which is a very bullish sign for stocks in general. Over the last few months, it's just been moving sideways, kind of consolidating, finding a bottom, and now it's showing us signs that it's ready to move higher, and it has tested those levels and it's satisfied with those levels. Okay, so that covers 2 of the 3 picks, and now we're going to get into our final pick. Remember, if you want another 3 stocks I'm watching video for October, make sure to get 200 likes on this video in the first 48 hours. But picking a third stock here was actually kind of a challenge looking through because there were just so many options to pick from. But what I decided to do here was go with a more risky company, a more volatile company, and I think they're gonna have some pretty good news coming out, which I'll go over in a second here in October. So this specific company has had a very volatile September. In fact, they've had a volatile 2018 in general. And that's because mainly of their CEO, Elon Musk. And yes, this company that I'm talking about is Tesla. So Musk has really been in the spotlight for negative things recently. First off, you have the whole Thailand cave diver situation where he's getting sued. Then you have the whole funding secured tweet that he released a few weeks ago. And then of course, we also have him smoking on a podcast, which a lot of people did not agree on. So the funny thing is here is that most of these things are media or PR related. It doesn't really affect the business directly, except for maybe the tweet, which could be argued. But these events have actually caused huge volatility and huge movement in this stock. Sometimes we saw Tesla down as much as 10% or even up as much as 10%. What I did notice this month though was how relaxed Elon Musk has been by doing interviews, for example, with people like Joe Rogan or even MKBHD. So this kind of gives me the impression that things are running fairly smoothly at the Gigafactory, and the numbers that they're expected to report are either meeting expectations or even exceeding expectations, because Elon Musk doesn't really look very stressed out this past month compared to previous months where he's been reportedly sleeping at the factory on the floors, doesn't spend time with anyone else except at the factory trying to meet those numbers, and just his overall attitude seemed to have been more stress induced. That's just kind of food for thought, something I observed, so maybe consider that in your analysis as well. Anyways, the reason that we're watching Tesla specifically for October 2018 is because the Model 3 has been selling exceptionally well based on the past month's numbers, and they're expected to report September's numbers on October 1st. So as you can see here, in August, the Model 3 came out as the number 5 best-selling car in the United States. However, if you do look at the revenue here, we can see that the Model 3 came in as number 1, and that was by a big margin as well. So this means that even though Tesla isn't selling as many units as their competitors right now, they're still bringing in a lot of cash from these sales, because the Model 3 is actually expected to have very high profit margins. And this cash can be used then to pay off some debt, maybe reinvest in the business, maybe build out some more factories like they are in China. So a lot of things can be done with the revenue that they're bringing in now. There's also an article out there that reportedly Tesla brings in at least around a 30% profit margin on these cars that they sell, the Model 3 specifically. And that's a huge profit margin for a company like Tesla because they need that cash to keep reinvesting in the business. So like I said, this is all incredible news, but what investors will be watching for in October is those Model 3 numbers, and they'll be looking to see if the Model 3 can still hold its number 1 position in the revenue category, and if it can move higher up in the total sales category in the United States. But now looking at what analysts have to say about Tesla, we can see here that the $320 price target is what they've set as a consensus, which is around $100 less than what Elon Musk wanted to go private at, which was at like $420 per share. The consensus is also at a hold rating, and this is with 27 analysts reporting in their targets on Tesla. So once again, if you want to see more information on Tesla or any of your other favorite stocks, check out Tip Ranks, link in the description below. You can sign up for free. One thing you need to keep in mind with Tesla is that it's such a volatile stock. So you could see the price target hit this week, maybe even exceed the price target, or we might even go as low as $250 per share this week. So that's something you need to keep in mind because it is a high risk volatile stock. And once again, the September numbers is what we want to watch out for here, and we may see a lot of analyst upgrades or downgrades after these numbers do come out. Now finally, if we look at the charts here for Tesla, we can see that we've just been volatile in this company in 2018. We came down to $250 per share earlier in September, and now we're close to around $300 per share. We held a support level, which is what I like to see and I was watching closely, but we're still below our moving averages here. The fact that all the moving averages are kind of close together, not really spread apart here, tells us that the overall sentiment, like the analysts, is a neutral or a hold. The market doesn't really know which direction Tesla's going to move in, whether that's to the upside or downside. So we'll have to wait for some catalyst to come out to actually move the stock significantly in either direction. So I'm personally bullish over the long term, so you can take that for whatever it's worth. This stock is honestly a swing trader's dream or day trader's dream. It's so volatile, you can make a lot of money on this company, but you also got to be cautious because it is a highly risky company. So if you guys want to see how I'm personally playing Tesla, again, that's going to be disclosed in the VIP group. Link will be in the description below. Alright guys, I hope you enjoyed this video. Remember, get those 200 likes in 48 hours and we'll release another 3 stocks I'm watching for October 2018. There's a lot of good companies out there, a lot of ones that I'm watching and trading personally. So if you want to see those, hit that like button down below and hit the subscribe button as well. Thanks for watching, guys. Hope you enjoyed this video. Don't forget to invest positively, and I'll see you in the next one.